Alrighty guys, welcome. So something I'm going to start doing, I think, more frequently is live on YouTube once a week, potentially on a Sunday, and on Sunday do a little bit of study with you guys. So I was thinking we can do ICT concepts, we can go back in the week, we can review price action, and it's also time for anyone in my community who wants to ask questions to come in and ask questions. So being Sunday here in Australia, I know if you're from America and the States, it's probably Saturday. It's probably still Saturday, right? But for us, it's Sunday here, ready for a new week. We can talk about what my thoughts are leading into the week. We can discuss NFP, what's happened there. And this will be something I'll probably do once a week or once a fortnight because I want to give you guys the opportunity to ask some questions. It'll be a bit of a mini masterclass slash question and answer, but it's a chance for you guys to ask questions and, do take this opportunity to do that. But we'll get started. I think this week, to be honest, that has just passed, the volume has picked up in the markets. So a lot of people that, in my Discord or even for myself, a lot of the trading this week has been much better than what was in August. I think a lot of people trading in August, they found it pretty difficult to trade. Or you'd find that maybe you have some really good periods, really bad periods. And I'd notice it, every single morning as I wake up in the market for the New York session, the market wasn't that good. There were some days where price did, pick up and where price did do its thing. But I think September price action has definitely opened up. And we can look back at the previous week. Now, the first thing I want to discuss is how price reacts, especially on NFP news days, right? Because obviously we can see what's happened in terms of structure here. And for me personally, I don't trade the New York session, but I have, and I may in the future, you never know. But the session, as ICT talks about, when we discuss, NFP and trading NFP, it's a two-stage delivery, right? So what's going to happen a lot of the time is if you're looking to trade NFP, you wait for the candle to come out and you're looking for key concepts. So I've got a video coming on YouTube pretty soon where I'm focusing on the concept of the power three, and I'm going to discuss that concept. So you guys can look at that too. But just have a look here. Look what price is doing. And I'm going to mark some stuff out here because this is all important. At face value, we look at the market right here. We can see price accumulates, price manipulates up to the upside, and then price distributes. Now, either move's fine. Some people might be taking the manipulation. Other people might be taking the distribution. You can take both. And that's the benefit of the power three concept. When you're trading the market, there's always going to be the opportunity to trade both. And especially if you trade the New York session, the volume on the manipulation and on the distribution is going to be enough in both cases. That's the way I like to see things. So, Friday's price action, I think was quite nice. We can also zoom out here, have a look. All right, have a look here. Now, something I want to discuss is how to use dealing ranges, how to use that, combine that with power three, and just go over the price action on, the last couple of weeks and just see. You can see our prices have been moving. We're moving in a range. Every time we come to the bottom of the range, we push up. We come to the top, we sell off. We come to the bottom, we push up. Come to the top, we sell off. So we have been ranging, and on a higher time frame, this will look a bit different. So if we go, say, onto a 4-hour chart here, it is a range, right? But these are some of the best conditions, in my opinion. These conditions here are some of the best conditions where you're going to take longs, you're going to take shorts. And literally, this is all we're doing. We've got, the top of the range here, which you can mark out like this. We've got the bottom of the range here, which you can mark out like that. And literally, every time we come up, you can look for shorts. Every time we come down, look for longs. And that's one of the easiest ways to find your bias or find your narrative in the market. And I think a lot of people, overcomplicate it and they want to look for too much in the market, right? So I'm a big believer in dealing ranges. Obviously, I trade ICT macros too. And with macros comes other things that we can look into. But really, that's as simple as it needs to be. We can see what price has done before that. And you can see this price structure is a little bit different. So here, obviously we're trending up. Here we are ranging, like trending up, but we're ranging overall. So an important part of trading is understanding market structure, but understanding that there's always going to be longs and shorts to take. It's literally a matter of what narrative do you want to choose, having some flexibility, and then taking the trade that suits your narrative the most. So for example, if you came into Friday, and let me just get rid of this, you come into Friday, and we'll go back onto a 15-minute chart. This for those that trade New York session. And you can see pretty much all of the Asian session price has stepped up, 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 up. London session, up, 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 up. To me, if we move up abruptly, there's a greater chance that we're going to move down. Why is it the case? Because we've left all that low resistance liquidity. We've left all that below. So a lot of people overcomplicate it. If you look for power 3 situations like this, which is what we had on Friday, or the opposite like this, right? And you look for trending markets to reverse, and just screenshot that. Build models off these, off these 4 variables, you'll be sorted. So as we're looking at the market and as we're looking at Friday, you might come in and, for example, you see this accumulation, you're on the 15-minute chart, you go, no worries, no problem. You mark out this here, which is your London low, and you can take longs off that. There's nothing wrong with that. You can see that sweeper sell side. You can drop onto the 1-minute chart, right? Just like this, boom. But do you really have an entry in the 1-minute chart to go long? Not really. Could you take a continuation trade over here? Of course you could, right? But the best trade, or the biggest trade in this case, is the downwards move. And why is it the case? Because NFP is a 2-stage delivery. So often what we see is this. The first stage is a manipulation. And we see that here. The second stage is the distribution, which we see obviously as the price goes down. The question a lot of people are going to have is, well, how do you know, Ruben? How do you know when the market turn? How do you know if the market's going to turn? How do you know when, if, what if I get it wrong? Well, there's a few answers to that. When price goes up like this, one way when we can know when the market's going to turn is macros, to put simply. So you can just do this. If you trade New York session, for example, you can see what the price does. So an NFP CPI, because that's coming up soon, PPI. It'll work exactly the same. And mark out the macro. Mark out 950 to 1010. Right, so mark that out. Now, you're seeing price trade up here. You say to yourself, well, we're already pushed up. I don't want to look for longs. We're too high up in the range now. There's no point for me to look for longs. So what we need to do here is need to wait. And you could just wait. Simply, what I do a lot of the time is I wait. If I'm expecting the price to reverse, I'll wait for the macro, I'll wait for more price structure to develop. And as price develops, I can zoom out a little bit, nothing there, zoom back in. And you can just wait for the macro, simply wait for the macro. You can see price is starting to move down now. You pull back. And at this point, you're thinking, I want to see lower prices. The macro can run towards liquidity. Where is the liquidity low? Why is it resting below? Because we've been stepping up all of the Asian session. And also the news weeks are good targets. A lot of people talk about this. It's not just one person's idea, it's many people's. The news weeks are really good targets. So that's your target. And so all we need to do now, all you need to do is you wait for the entry model that you require. So here's your buy side sweep. We've got that. Some people like to use inverses. Some people use order blocks. So as price plays out, you come up again. And now this is quite interesting, right? We've come up, we've tried again to sweep the high, we've failed to do so. So this high should be protected. We've come back down again here. What I find interesting is narrowing the macro. So as soon as this candle, like if you're looking for shorts and we're about here, You want to see price do something. You want to see price start moving to sell side targets. If it doesn't, like if price started to do this, then you're wrong. And then I'm wrong. And then what we need to wait for is another sweep. And after that sweep, see if then we start to get that sell side delivery. So it's a matter of having an idea, having a narrative, but then being flexible with the market. So you're not necessarily imposing your view on the market, but you're also allowing yourself to, stick and be confident with it. And as I go through this, if you have questions, post them in the chat. Happy to answer. So you see price start trying to play out here. It's the macro, we're looking for sells. It's starting to look bearish. We're starting to look really bearish right now. So many ways you can enter here. So many ways. Now, a lot of people are taking entries from up here, or maybe this is you. Maybe you said, okay, well, look, there's an inverse fair value gap here, and maybe you took a short from here, and maybe your stop goes above the bodies, and guess what happens to you? You get stopped out. And this is something I've been talking to my, premium community about, and even just other people I'm helping, friends that I'm trying to help. Welcome. You can take losses. It's okay to take losses. And I've got a video about this coming on YouTube as well. The other day, on this day in London session, I took a loss trying to go short, and I also took a win. And you'll see kind of how my thought process changes between the two. Just because you take a loss doesn't mean you're wrong. You could be, but you need to have the ability to take the loss, reassess, do a risk assessment, and determine if your loss was based on your poor judgment or if it was just based on market structure. And here, the narrative still remains. We still want to see lower prices. So as price closes here on this candle, which is 952 in the macro, the next best entry, in my opinion, comes from the order block, right? So when price closes below here, that's your bearish order block. And here's the beautiful thing. In any market system or market structure, there's going to be so many entries, so many entries to take. And a lot of people are going to be like, well, which one is the best one? Should I use the inversion fair value gap? Should I just use a market structure shift? Should I use an order block? Should I use a breaker block? Should I use a unicorn? Should I use, there's many, or should I use a turtle soup, right? It doesn't matter. That is just how you enter, but you need the narrative as to why you want to see lower prices. And that is the big difference. So instead of chasing the pattern, chase the narrative, because the entry model, you can adjust it. So for example, some people enter right on this candle close. Other people wait for it to trade back into it. Other people wait for it to trade away from it. They're all valid entries. Taking a short from here, you can put a stop loss above that order block, right? Expecting that this stay open, because we've already traded into it. You can see we've traded into that civvy, we've rejected. What do you target? Well, it depends. Like for me, I like to take partials, one-to-ones a lot of the time. If I've got a really clear target in mind, then I might hold. So a lot of people ask me about that too. If price is continuing to be bearish, you trail your stop loss so you can capitalize on most of the move. So you've got to trade from a position where you're not fearful, you're not greedy, but you're trading from a position where you're using the market structure to, I guess, align with your thoughts. And that's probably the most important thing. So yes, you could do something like this. Yes, you could go for a typical 1-2, but I don't advise people to do it. I don't think that, in my opinion, a fixed risk to reward works all the time. Yes, it works here, but it doesn't always work. And the reason for that is because the market structure does not actually align with what you're looking for. So can you see, even in this price fractal, right? If we mark out all the PD rays here, if we mark out everything that to me is important, these are all the elements that are important. And yes, there's other things here too. This candle here, this down close candle, that's a breaker block. We trade back into that here. We trade back into the order block. You can start to see that there's different PD rays that exist, but you can choose the ones that make most sense for you. That's what I'd say. And so as we start to look at this, you can see price trades. Now, once we come and sweep that low, that technically is the trade. That's the best trade. But there was another trade on NFP Friday that I think is quite important to look at, right? And that comes in the next macro. Again, if you don't see anything, if price is just selling off like this, why are you trying to fight the trend? Just wait, because we know the macro can reverse. So wait until the macro comes. And here's another situation where you might say, okay, well, the macro's here, right? That's 10.50. And here is 11.10. And you might say, okay, well, I saw this, and you might go, well, look, I entered off an inverse fair value gap here. And you might have said, well, look, I've taken a long position here, stop's gone below there, and what happens to you? You get stopped out. Does it mean you should be concerned? No. It just means you're wrong to start. Does it mean you're wrong forever? No, right? The market can still turn in the macro if your idea is for price to reverse. And so all you need to do is to be able to come back and reattempt a trade as soon as those trades become valid again. You're not always going to have the first trade to win, right? And this is an important psychological lesson, how to control your emotions after losing. You're not always going to have the first trade win. Sometimes the first trade will win, and it's beautiful, right? You take a trade, you're done, easy. Some days you have to take losses, and that's just a part of the process. And I think a lot of people get concerned with situations like this, and they're trying to figure out a way to always avoid the loss. Always avoid the loss. How do I avoid this loss? How do I avoid taking a losing long here? How do I avoid it? You can't, right? You can't avoid losses. Even an A+ system, even a system that is, really, really good, is going to have losing trades. So all we can do as traders is focus on applying risk management to our positions, reattempting trades that make sense to us, and then going for it again. So you look at a situation like this, right? You might take a loss here, and then you can mitigate that loss plus make profit there. Does that make sense? If you're too fearful, and if you say, oh, I can't do it, I've taken a loss, I'm done. You don't give yourself, or you don't give your edge the ability or the probability for it to play out. Because sometimes, again, it's all random. If your trade has, say, or your strategy has like a 75% win rate, you might take 4 trades in a row, they could be losers. But also you could take 4 trades in a row and they could be winners too. Does that make sense? And I'll answer the questions here. So how can you anticipate that it is a reversal or not a retracement? There's a few ways, right? There's a few ways where you can anticipate a little bit more, right? And we'll just get out of replay mode and we'll discuss this. This is a good question. So the question is this: how can you anticipate if it is a reversal or just a pullback? That's kind of the framework. The first thing I'd say, right, with this question, the first thing I'd say as an answer is you can't always. So what I'm about to say is not a 100% way to do it, because nothing's 100%. But there's ways that you can increase the probability that you can actually get the reversal, not the pullback. That's what I'd say. So how can we do this, right? How can we anticipate if it's just a pullback or if it's a reversal? We can zoom out and look at higher time frame structure. That's probably the best way to do it. And the best and the easiest way to do it is literally just to use dealing ranges. Mark out the previous highs and lows like this. So that's in blue and this one's in red, like that, boom, boom. And just look where we are. So in this case, I'm going to mark out the equilibrium of the range like this. So if we're below equilibrium and you want to look for a long, great. If you take a losing trade, it's below equilibrium and there's a macro, it's a good trade to take. It's a good loser to take. It's better if you have a fair value gap here as well. That's better, right? But that's one way. You use like a premium or discount. That's what I'd say. The second, like I mentioned, is to look at the macro, right? So you can see how it looks here. We're below equilibrium. It's fair, in my opinion, to look for a long. It's fair to look for a long from here. It's fair. And that, in my opinion, is a fair loss to take. There's nothing wrong with taking that loss, waiting a little bit longer, and then going, okay, cool, here's my next entry. I'm going to take another trade. I'm going to still have confidence in it. We've swept more sell side. We've reacted again, and we'll see if price can move higher. So in terms of that question, I hope that answers it for you, but that's a really good question. That's a really good question. Anticipating reversals and retracements, you won't always get it correct. You won't always get the narrative correct. But that's where we can use those basic principles. And hopefully, right, hopefully what will happen is by doing that, we get it more right than wrong. There'll still be times, right? There'll still be times, don't get me wrong, where you'll take a long here, another long here, and we just keep selling down. It'll happen. But that is where, as traders, we got to have good risk management and go, wait a sec, I'm wrong twice, I'm wrong 3 times. I only wanted to risk this much per day. I've got to call it quits. So that's worst case, right? But best case, I mean, yeah, you take a loss to start, you take a winner on the second trade, and use that winner when you're still new, when you still don't have that much confidence. Use that winner to just come back to break even. When you build more confidence in your model, the second trade you take, you can try and get a little bit more. So at least you bring your account back into profit. That's what I'd say. So that's the best way to do it. That's what I've found. It just keeps it simple. There's no magic, magic way to do it. But that's a really good question. Any other questions, keep posting them in. Happy to help out. But I think, as we go through, ask your questions, and we'll go through some of the price action as well in the week. Because I think, honestly, the week for whatever session you trade was quite good. We look at London session in pre-NFP, and obviously it was just longs. There were some shorts over here, but obviously price is really bullish. We go back to previous day. It's the same structure, and I've got a video about this anyway, so keep an eye for that. It's the power of 3. So New York session's been providing really good setups. This day was quite choppy with the community, so there was break-evens, there was losses, and then there was wins in this spur of price action here. Originally looking to take price lower, and then we reacted immediately straight back up. But you had to be quick here, and you had to take your profits quick. So you couldn't be greedy. That was the thing about this day. If you were a bit greedy, if you try to hold too long without taking a partial, you'd get break even, or loss. And that's where these conditions can chop people up, these ones. And the same would be for New York session. If you've got conditions like that, if you take a trade and your first trade is a loser, and your second trade is a break even, and the third trade is a break even, then you probably should either stop trading, or if you're going to take another trade, you still feel okay, then you should probably consider taking an early partial. Pay yourself, get out of there, and come back the next day when the market's moving a bit more clearly. That's what I'd say. So yeah, ask away, guys, ask away. Happy to answer your questions. But that's kind of what we've seen throughout the week so far anyway. I think the week's been pretty good. As September's come in, we've seen price expand. These streams, right, I'm going to do these once a week, probably on a Sunday, potentially at different times to accommodate for different people. Because I know if you're from the States, it'd be quite early right now. It'd be 3 a.m. So I'll change up the streams as well. But this is what it's all about. So trading is all about probabilities, and it's all about putting yourself in those high probability positions, looking for repeatable frameworks, looking for repeatable patterns, looking for things that occur time and time again. That's what we need as traders. So it doesn't matter if you want to trade London session, New York session, you trade the session that best suits you. And this market profile here, that we just discussed for New York session, this is exactly what ICT talks about for the power 3. You start here, you come up, you come down, and then you close down here. It's exactly what's happened there. Now you might say, well, what about this open? What about the new week? Well, I'll give you my thoughts. Because obviously tomorrow for me, the market's open, being Monday, Sunday in New York. But here's my thoughts, I don't typically do projections into the following week, but I think it's interesting to look at. Based on what we've been doing with price, right, we're stuck in a range. So I talked about at the start. You can see we've just been, in this range for a bit now. Pretty much all of August, we've been like this. So what I find interesting is this. We've now swept out this high. I'd be curious to see if we come back down here I think we swept that low. Let me just double check. If not, then I think we can, yeah, we swept that low. So maybe what I'm thinking is this, we come down like that and then maybe swing back up. I do believe the market will keep going up eventually, but obviously on the higher time frames, you can even see on the daily chart. It's not a one directional market, it's both, right? It's both. And you can see exactly how it looks. I don't really try to predict the open, you know what I mean? But what I'd say is this, because we've had that power 3, we could easily come down and sweep some of these lows. 1, 2, 3, 4, and maybe react from somewhere down here. That, if we did come down here, by the way, would be a really nice area to look for a long. I'm not saying it will come down there, but if it does, and it's in a session that you trade, if it's in my session, if it's in London session, I'll be looking for longs there, 100%. If it's an Asian session, I'll be looking for longs. If it's New York session, I'll also be looking for longs. And you might say, why? Well, it's in the bottom of the range. You know, we've got the high here, formed after NFP. We've got the low here. Pull out the Fibonacci, use the range. It's exactly what I want. It's exactly what I want. And it's held price before. So the way I see it, having price do something like this would be great. If we step up here, I'll let it step up. And then up here, oh yeah, I'm looking for shorts up here. So if you're curious about the areas I'm looking at for the following week, yeah, up here, this is where I'd be very high on shorts. Like I'd be risk on situation, and down here would be for longs. But notice how when the market's in the middle of those two ranges, there's nothing there. There's nothing there that I'm saying, you know, I have to take a trade or it has to go here. I'm planning for both situations. I'm planning for both the longs and the shorts. So I say to myself, kind of like a computer program, if this happens, this is the way to see it, then I will do that. So if price comes up like this, then I'm going to look for shorts. If price sells off, I may participate in the shorts down here, maybe, but lower risk. And then down here, yes, if we're down here, I'd be looking for longs. If we're up here, I'd be looking for shorts. And I'd feel very confident in risking a little bit more for myself, not for you, but for myself, to have a risk on situation. So those are the setups I like. That's how I build my narrative. And then I'll just let the market open and see, how it plays out. You guys at the moment on YouTube watching along, are you guys from Telegram, Discord? Let me know where you're from. And whereabouts in the world? Let me know in the chat. Whereabouts in the world? What part of the globe? Because we've got a big community in terms of people from across the globe, and also spread across both Discord, YouTube, Telegram. Let me know in the chat. I recognize a few names from the Discord. That's where we're sitting. That's where we're sitting. So the market will repeat, and there's no magic strategy. There's nothing that I can say, hand on my heart, works 100% of the time. There'll be systems that work a lot if they don't demand as much risk to reward. So typically, as you try to increase your risk to reward, you're going to have more losers or more break-evens. If you go for smaller pools in the market, if you go for 1-to-1s and 1-to-2s. YouTube, following for quite some time. Germany, cool, Michael, cool. For you guys currently in the chat, right? What's the hardest thing for you guys about trading? Is it the mindset? Is it the strategy? What is it for you guys? What would you say? I'd be curious to know. Mindset, strategy, a mixture of both. The psychology. And how long have you guys been trading for? And we'll just zoom out here. I want to actually go back on the daily chart for a sec. Mindset, psychology, all the factors since 2017. Cool. Yeah, it's a big one. You know, it's a big one. Psychology, mindset, it's a big one. See, here's what I've realized with trading, right? We can never be perfect. And the longer I chased perfection, the longer I didn't see success. And I'll also say this, you got to trade, and everyone's got to trade based on their own circumstances. So everyone's from a different place. Everyone's got a different job. Everyone has a different situation with family, with other commitments. And so a lot of people want to compare themselves to other people and say, well, I should be doing what they're doing at this point in time. Does that make sense? But I've found out that you'll save a lot of time and a lot of money if you stick to what you can do. And I would honestly like spend, if you feel like you're over the strategy, like you know the strategy, sorry, then the main thing probably to work on is psychology. Understand that trading is all probabilities. That really helped me. So yes, if I took a loss, I know that I can take a win after that. Or for example, I know that statistically, say my win rate this week, which it is 67%. Let's just say 60%. That means in 10 trading days, if all I did was take one trade, I should win 6 out of the 10 days, right? I should win 6 out of the 10. So if for whatever reason, somehow, you know, I managed to lose 4 days in a row. Now, mind you, I take more than one trade a day. If I lose, I take another trade. I know in my head that based on probability, there's probably a chance I'm going to take a winner soon. And the same with day by day. If there's a loser to start, it doesn't mean the model's wrong. It just might mean you need to reattempt it. Jatin says mindset, psychology, all the factors since 2017. And now you're following the macro model. Yeah, that's good. I'm glad to hear. It's good to see a lot of people using it, you know. And there's so much information on YouTube. Like, yeah, of course I've got the premium and that's fine. We go live on Zoom. But for those that want to study themselves, YouTube, there's so much information there. Plenty of resources there to learn the model. And it's not that tricky. I feel like the macro model, or you know, using that as well as the checklist in my Discord, I think it really sets people up for success. It really sets people up. Because realistically, you need one model or one system, and you need to be able to apply it time and time again in the market. And that's the biggest thing. The sooner a lot of people do that, the more likely they are going to be profitable, and the sooner they're going to be profitable. The longer amount of time people spend chopping and changing because they lost a couple of days in a row, the longer they'll be unprofitable for. And that's unfortunately reality. Some people unfortunately cannot get out of that cycle of I need to win, and I need to change based on the mindset. And that gets a lot of people messed up. Michael, fear taking higher lot sizes, yeah. 12 years. Yeah, it's one of those things. And the thing is, Michael, here's the thing, right? I'm a big believer in risk on versus risk off. You know, so if the market conditions are good, risk on. With news conditions, it can be really tricky But what I'd say with news conditions is I'd do normal risk, right? When I used to trade New York session, but be prepared to have to reattempt the trade, but capitalize on the volatility. That's what I try to say. So yes, be prepared. If someone goes, well, look, I took a short here and it didn't work out, that's okay, but be prepared to enter again and try to ride the volatility. Like on news days, especially NFP, this is how it used to be. For a couple months, especially in August, and I think even the month before, June and July, it wasn't like this. But this month and before that, and when I first started learning ICT, for multiple months, it'd be very similar, where it's a two-stage delivery. You may have to re-enter again, but once you get on side with that move, the big move, yes, you can lose, but the winner is going to be much, much bigger than the loser. And in this case, there's an opportunity to, scale in. You can enter small and then just scale in your position, but I feel like that's a big thing. I feel like that's a big thing for a lot of people. But you have to build it up, so you start with a small amount, you start with micros, and then you might go to 1 mini. Everyone's got a different situation in terms of how much they can risk, because everyone's got a different account size with a different buffer and different risk tolerance. And it's all probability at the end of the day. So I think that's an important point. But fear is a part of it. Everyone feels fear. If anyone, including myself, if I'm putting on high risk on a trade, yeah, there's an idea in my head that, yeah, it could go against me. And if it does, then, I've got to accept that risk. But I think for me, when I'm putting on high risk, I accept the risk before I do it as well. So I go, look, if I lose this trade because I'm doing high risk, I can't take another one for today. And before I click that button, I'm okay with taking a loss. And yes, that's happened before. High risk, and I've had to switch. And that's why I'm a big believer. If you don't copy trade, have different sets of accounts. Give yourself opportunities, because prop firms allow you to do that. They allow you to spread the risk across different accounts if you want to, or you can copy trade. For a lot of people, they like to do that. Zach, since 21 and not profitable. For you, Zach, what would you say if you're still here? Is it the mindset? Is it the strategy? Is it a mixture of both? Have you passed evals before, Zach, or are you still struggling to do that? Because we can discuss that too. That's an important point. Trader, currently following your model, profitable. Congrats, it's good. Michael, the macro idea is a great enhancement. Yeah, the macro idea is really good for a lot of people because it limits when you have to trade and it prevents over trading. And then you can build on top of that. So if we mark out the macros, and I'll keep answering your questions, just post them in and I'll answer as I go. If we mark out all the macros, just to give you a proof of concept, guys, to prove that it does work, right? Do this for yourself too. This is a good activity. Mark out all the macros, and it doesn't matter what session you trade, whether you trade New York session or London session, mark them all out. Now, NFP is a bit different because the New York session is the one to trade for NFP. If we go back to previous days though, mark out the macros, right? Now, not every day is it going to work, right? Some days you're going to get chopped out of the market and you've got to be able to reattempt. And we'll talk about that. But this is the benefit. Like even here, you look at this, someone might have said, well, Ruben, I've taken along here, and they get stopped out. Doesn't matter. If you still believe the trade's going to go higher and the reasoning is still there and it hasn't been violated, you take another trade. That's what I do. Sometimes you're going to get the first trade, sometimes it's not going to happen, right? But you need to be able to have that flexibility. The macros work in any session, even in London session. You mark out this one here, so 250 and 310. You mark that out. You can see what we do there. There's entry models there, right, during that macro. We go back a little bit more. Mark out this macro. This is Asian session. So this is 1150 around, where is it? There. 1150 to, where's 1210? There. Look what the macro does. Doesn't the macro, in this case, doesn't it go from bearish and then it moves up? Doesn't this macro go from bearish and moves up? Doesn't this macro almost, like very close, go from bearish to move up? Doesn't this macro go from bullish to move down? Doesn't this one go from bearish to move up? You get the point, right? So as a case study, and you'll see it, right? Even just go back on your charts like this and do it. And it doesn't matter what session you trade. Like I trade Asian session too. Look at this. 750, 810. Let's go to the next one, right? 950, around there, to 1010. They're setups, right? And as you can see, it doesn't always work. There are some where you might have to reattempt again, but a lot of the time you can use macros to phrase your strategy, which is a good idea. What model would I recommend for positional trades? Elaborate on that. What do you mean? But that'll be an exercise I'd do. If you're not confident with macros yet, I'll do that, because that's what I personally did when I first started learning them. And that's what gave me confidence. I observed it myself, but then I said, wait a sec, let me just go back and have a look. And then I did a little bit of back testing, about 2 hours max. I've only done about 10 hours of back testing over the last 2 years. And a couple of those hours were looking at macros doing this. And I said to myself, well, wait a sec, if a lot of the time something important happens in the macro, then I can just trade those. And yeah, there'll be times where it doesn't work out, but that's where I need to get better at risk management. That's the way I like to see it, in terms of using that as a framework. I mean, it's quite important. Ruben, I'll answer your question, Gian. What can we do to push through the break-even stage where you are right now? Well, my question for you, right, if you're break-even, 2 questions actually. Do you risk the same every trade? And how many trades a day would you typically take? What do you do once you take a losing trade? Those would be my questions for you. And then from there, we can discuss, because they're all going to have an impact on whether you break even or not. Trader, your model accuracy is enhanced when it's aligned. Yep, exactly. When it's aligned with higher time frame and it's aligned with fair value gaps and premium and discount, it's enhanced. And you know what that means? Trader? That is now combining price and combining time, which is exactly what any trader, ICT, whatever, tries to do. Align volume, align volatility, which we see in the macro, with the price, the market structure elements. All right, that's the best thing to do. And look here, right? Try to pick up, even if you trade the PM session, any trade here that you can take where a reversal happens. Just have a look. How many times the macro, especially for New York session and London session, how many times the macro offers a reversal or it does something important? A lot of times. You could literally approach the market, I reckon, with a 45-50% win rate just by looking at the 1 minute chart and looking at a macro and inversion and low resistance. I reckon you could. So you can see our price does that. We just keep using that structure. And it applies for any session, Does it always work out? No, it doesn't. So here, right, in this macro, for example, you might take a long during the London session. Say you took a long from this inverse and you get stopped out and you go, well, what do? You wait. If you're still in a bullish trade, you wait for the next entry and then you take that. But look over here. This is the trade that I mentioned in my Discord. This is the 150 to 210 macro. What's price do? Just on the 1 minute chart, we haven't even gone to the higher time frame yet, right? We go from bearish to bullish. When does that pivot happen during the macro? Interesting, right? We can go back in time and you'll see this play out time and time again. Down here, just before the macro. Down here, 1150 to 1210. Interesting, right? Interesting. Macro, where is it? Somewhere here. Continuation. So if you just stick to macros, yeah, you're not going to get a trade every day. Like, it won't happen every day. But you will get plenty of opportunity. Like even here, you've got 950 to 1010. Why is it the turnaround point? Why does that form the high of the session? It's just a repeatable pattern. That happens time and time again. And sometimes it works, sometimes it doesn't. We look back over here. Obviously, this is the 250 to 310. This is another good trade with the premium community here. We also look through longs, scalp longs from this macro here. So there's a long in this macro, and then what happened here? We sold off. So if you're getting new to like ICT and bias, use the macros as a framework, as like a structure, and literally just do that. Do that for a couple of weeks. Go back and mark them all out, and then try to find, like, you got to study it for yourself so you believe it, and so you know exactly what you're looking for. But that's as easy as I can put it. Really just focus on macros, focus on market structure, combine the two together, accept losses, accept that maybe once, if you just follow that system once or twice a week, maybe you might have to have a losing day. But when you get good at a system, there's no reason why you can't win 5 days in a row. There's no reason why you can't have 3 to 4 to 5 winning days out of 5. No reason why. And that's what I say to people. Aim for that. Aim for 3 days, 4 days, or 5 days a week to be green. That's what you should be aiming for. For swing trades, I mean, anything really. Anything can be good for swing trades. So, for example, you could use the higher time frame. If I was gonna swing trade, I'll just use premium and discount. I'll just do this. And depends how long you mean for swing trades. Everyone has a different mindset on that. But if I was going to swing trade, I'll just do premium and discount, right? And fair value gaps. That's what I'd do. In these conditions, I know that's a bit messy now, but in these conditions, it's a bit easier because we're swinging either way. But look for price to be in deep premium, deep discount. Down here, deep premium, deep discount. Down here, in sort of a nice fair value gap. Anytime we're in a higher time frame level. Down here, deep discount. That's what you want. That's what you want. So it depends, Swing trading, scalping, you can kind of do a mix of both. Here's another example too while I see it. This looks like the NFP Friday. Accumulation, manipulation, distribution, then we stop. Same thing. So you'll see this repeat time and time again. But yeah, any questions, keep asking through, guys. Keep asking through. I think that's the important thing. And to answer the question, because I haven't had a response yet, someone asked recently, what to do if you're at break even. If you're at the break even stage where you just can't seem to make profit or keep the profit, there's probably only a few reasons why. Only a few reasons why. But I guarantee you one of the big problems is this. It's not the strategy. It's really not. And I'll give you an example. I'll give you guys an example, right? Trader A, right? Trader A versus Trader B. Trader A takes one trade a day. That's all they do. They take one trade a day, and whether they win or lose, they say, I'm done. Trader B takes max 3, or when they reach their risk limit. Now, these two people, Trader A is going to be risking a little bit more, but they're going to have different results, dramatically different results. Because think about this. Let's say on Monday, right? Trader A takes a loss. Well, they've lost Monday. Tuesday's a loss. They've lost Tuesday. Wednesday's a loss. They've lost Wednesday. Thursday's a loss. They've lost Thursday. Friday, they win the first trade. Great. They are not going to be up for the week. They might be break even or they might be slightly down. Trader B loses on Monday the first trade. They take a winner. They end up at break even for the day. They lose the second day. They take a winner, break even. They lose the third. They lose the third again. They've got a losing day. The fourth, they might take a loser again. And then the fifth, they take a winner. Trader B is going to be in a better position than Trader A. Just by that simple change in risk management of adjusting risk and allowing for more trades. The probability, of taking multiple trades in a row, losses, is decently high. Like if your win rate is around 70%, 65 like myself, you're going to take a few losses in a row. It's going to happen, but you've got to be able to mitigate that and come back from that. And so that's why I'm not really a big believer in this. I think if you win, then yes, see you later. But if you lose, I don't believe that should be it. That for me, and I've done the stats, I've collected the data, I've analyzed the data, it would not work as well. It would not work as well. So one thing, the reason why a lot of people could be break even is that could be risk management. The second is you're risking too much on poor quality setups. You think every single macro is a good setup. It's not. Just because we're in a macro doesn't mean it's a good trade. As Trader mentioned right in the chat, you have to align it with, and I'll pin that message. You have to align it, right? You have to align it with high time frame structure. And that is really important. If you just go in the markets and go, oh, there's a macro, there's an inversion, you're going to get cooked. Sometimes it's going to work, right? It'll work, but there'll be a string of probability trades where you try to take a trade and you'll lose, and then you'll have a losing streak. And you might be like, well, what's wrong with my strategy? Well, nothing. It's just that you didn't use a high time frame. That's all it is. The third is you're afraid. You're afraid to let trades run when they need to. Your risk to reward is too small. 1-to-1 is fine. 1-to-1 is profitable. But if you don't find success with 1-to-1, you need a pretty high win rate for this. Then experiment with doing 1-to-1 and holding some runners. Let the winners run, cut the losers short. Get good at cutting trades when you don't like how they look, and get better at holding trades when they're looking really good. So you can take advantage of the quality. For those that are able to trade CFDs, I had some friends who practice on 1 hour and 30 minutes, fair value gaps, and notice breakers and unicorns. Yeah. It's a way, like obviously with ICT, all these PDRAs, a breaker, a fair value gap, the ways to determine where the market's going to find support and where the market's going to find resistance. And so however you do that is technically fine. Technically it's fine. But that's what I'd say. So for those that are break even, that's what I'd say there. You got to get better at risk management for a lot of people, because that's what's holding a lot of people back, in my opinion. I see people all the time, they come to me with stats, but little tweaks could make a whole world of difference. A whole world of difference. So every time you put a trade on, there's a risk that you lose money. There's a risk. Every single time. And there's also the possibility that you make money. So when you think about it, it's probability. So if it's probability, you have to trust in the probability. But if you do random things, and this is the big thing, if you do random things, you go against your model that you have data collected on, then how can you expect that probability to play out? It's not going to be a fair representation of, of what it's meant to be. That's what I'd say. And for those watching, I'm curious, right? I'm going to put a poll in the chat, right? Let me know, because I think a lot of people will be in a different position. Take a vote. Got a few votes coming in. So who's passed an eval? And it doesn't matter if you haven't. It's not a bad thing. And it's not a good thing. Because in reality, the passing for a lot of people, if you're not there yet, what you'll realize is that the passing may not be the hard thing when you get there. It's the keeping. It's the keeping of the account. It's getting the payout. So we've got a bit of a mix, 50-50 at the moment. $60.30. And trading's a hard game, guys. Don't think it's easy. It's not easy. The strategy is easy, yes. To learn a strategy for a lot of people, they can learn it within a couple months. What is hard is the psychology of trading and this. Psychology and risk management. And not just, how much you risk and this and that. It's not just about controlling your emotions, because it's easier said than done. It's about, have you identified the conditions where price is going to run more? Have you identified the areas of price by doing your own data collection where you should risk more, where you should risk less? That's what really matters. Yeah, and I've been there too. I think everyone's been in those positions where, you'd be close to passing an account, or for some close to getting a payout, and it's gone. Because what changes in that moment, or what changes, is the mindset. You switch from being focused on the process of, I'm just trading what I see, I'm trading the markets, and then all of a sudden, in your brain, you go, well, if I just take this one trade, if I do this, if I do that, if I can do this, if I can make 50, if I can make 100, if I can make this, if I get one more winning day, if, then I'll get this. So you put in your head, and I've done the same thing, potential possibilities that could happen. And as a result, subconsciously, you trade different. And everyone's been there. You'll come back later and you'll say, well, why did I do that? Maybe in the moment. Maybe in the moment that you shouldn't be doing what you're doing and you're risking too much. But at the end of the day, what will happen is you'll come back and you can't change it. And I think as time goes on, you get better at managing that. But you also get better, and I know what conditions make me do silly things and what conditions don't. And the ones that make me do silly things in the past, I try to avoid, or I just say see you later. Or I have different strategies that I can use to keep myself neutral. Because all it takes for anyone is something, whether, for me or for anyone, it might be you came very close to TP, maybe you got a bit greedy, you're like, let's just hold a little bit more, you got a little bit greedy, and then price comes and stops you at a break even. That's hard, that's tricky. And everyone's gonna feel emotions of that, because you should have taken profits, but it's a matter of, well, okay, do you just go straight back in, or do you just wait for another setup? And that'll dramatically change things. You can win, lose, win, lose, win, lose, win, lose. Win one day, lose the next, win one day, lose the next, win one day, lose the next. And eventually, when probability suits your conditions, you're gonna have that streak of trades. You're not always gonna have winning streaks. You might have a few weeks, and I'm the same, or a few months where you go really good, and a few weeks where you're just sitting at nothing or a little bit of profit. But it's about controlling it in those situations and then accepting the probability. That's what I'd say. Nick, that's all good. I'm glad to hear. That's really my goal. I mean, when I started learning ICT, I learned everything, right? I watched a lot of his content, 2022, whatever. But I wanted a way to simplify it for myself, and then I thought maybe other people would benefit. In terms of macros, that pinned comment, right, from Trader is what I'd say to anyone. The model, or how I trade, is definitely enhanced when it has a higher time frame fair value gap. When you've got, like, say you got price do this, and then the price starts to step down like this, right? If there's a higher time frame fair value gap here and you're looking for a reversal, that's better, right? If there's not a high time frame fair value gap here and that's all chop, it can still work in the macro, but what I've found is that you may have to take a loss and then try again, and there can be situations where it just keeps going like this. And then it comes to the bottom of the range, so use ranges and higher time frames, and then it reverses. It won't always work, but that's my advice. That's what I tell myself. And it works the best. It's just a good way. And now for me, I kind of trade, like I trade macros. If there's nothing I see, I'll trade macros. If there is market structure that I see, I'll trade the structure. So for example, price might be in discount. I'm looking for longs. It reacts really nicely. We've got multiple PDRAs, I'll still take a long. If there's a macro involved, I'll just risk more. That's the way I like to put it. Because I'm expecting the macro to do more and to be quicker. So if I can have that happen, I'll do that. But it prevents you from over trading. If you're just going to trade macros, it'll prevent you from over trading because in a session, you can only trade a couple. You know what I mean? Say you trade New York, you can only really trade 2 macros. If you stick to it, right? If you stick to it. So that's what I'll be saying there. London session, there's quite a few, but for me personally, I mean, with the Discord anyway, we'll be on for the first macro, the second macro, and that's pretty much it. Sometimes we'll stay on for the third, but by that point, there'll be wins, break-evens, losses, and that's it. Asian session's a bit different because I'll kind of be scoping for the whole session, but what I look for with Asian session is to see if there's volatility at the start of the session. If there is, I'm interested in the first macro. If there's not, then I'll let more price structure develop, and then closer towards midnight, and the midnight macro around there is when I look for positions. You don't want to be glued to the chart, but you want to have areas where price can react from, where you're looking for trades. That's the best way to put it. You know, like any day, price is literally going to do one of 3 things. Like literally, it's either going to react after sweeping liquidity, it's going to react after balancing a range, or it's going to react after balancing a fair value gap. If you remember that and you try to base your trades on this, you're going to be sweet. How would this look like on a chart? Right? Imagine this. Price forms a low, forms a high, starts moving down. Okay. There's a fair value gap here. Price comes into that higher time frame gap. And also, what is it doing? It's doing number 3 and it's doing number 2. Great. Price could also do this. Same situation, same scenario. Assume this is Asian low or London low. This is Asian high, London high. Whatever session you trade, doesn't matter. Say it's a session high, a session low. Price does this, okay. You lose. You try to take a long, you lose. Okay, who cares? There was an inverse here, doesn't work out. Come back, wait. If you still think longs are in play, wait. Don't always switch up. Like, yes, you can like change your narrative, but don't necessarily always switch up because it doesn't work out a lot of the time. And what I've found is that if you try to always switch up, you go long here, then short there, then you get stopped out on both, and you'll be like, oh, what should I trade? Which one should I take? Stick to something until it's proven fully wrong. And then maybe down here, you got Asian low. We come out and price does this. And now we're in a macro. Oh, beautiful. So in this case, it didn't work. But in this case, we're using point number 1. So just kind of going off the structure. And there's so many different possibilities that can happen, but you just look for one of those 3 things. Yeah, external range to internal range. The market is only going to react after doing one of these 3 things. If it hasn't done one of those 3 things and you're taking a trade, you should be very careful because it might not work out. That'll increase your chance of anything working. Doesn't matter if you trade macros or not. If you have these 3 things in a trade to support your trade, you're going to have a lot more success in the market, is what I find. And I'm going to do another poll, right? Let's do a little sentiment here. So most people are saying they haven't passed, which is interesting. We'll discuss some things then. I've made a video in the past about passing evals, but I might do a little bit more in the future. This is the next question for you guys, right? So take a vote. And a few people have answered already. And I know some people, right, have been trading, but trading different concepts. So I'm speaking specifically for ICT concepts. And we'll do one more option here. Everyone's going to be different, but I'm curious. Let's have a go. How long have you guys been trading specifically ICT? Specifically. Because I know some people like that I talk to, they'll come from other strategies like supply and demand, support and resistance, bear flags, bull flags, whatever, and they'll come to ICT. But the market repeats. The market repeats, guys. The patterns repeat. The same thing will occur again and again and again and again and again. Yeah. So with macros, yeah, 10 before and 10 after, but I wouldn't be so strict on it. So all I mean by that is this. If there's a setup that occurs, what session do you trade, by the way? What session do you trade? Because obviously, yeah, the macros is heaps. You've got obviously the first one of the day is this. That's an Asian session, right? You got the last one of the day, which is this. That's in PM session. New York, London, New York. Yeah. So say then, for example, I don't know, say you're trading this one and say you see a setup, everything looks good. And let's change this. Everything looks good. This is New York time, by the way, New York. I always have my charts to New York. I'm from Australia, but I just find it easier so I can reference it. So 150 to 210, you go, I see a setup, but it's 143. Who cares? Take the trade. Because the thing is, the macro then can spool towards your liquidity. Does that make sense? Or it can spool towards where you need it. So I'm not too strict. Like I'll enter before the macro, I'll enter during, I'll enter slightly after. If it's not within, 5 or so minutes before, 5 or so after, then I have to have one of these three things. So I may not have the macro, but I have these three things, I'll still take the trade. If it's like, I don't know, 137, and I'm like, this looks really good. This looks really good on the 1 minute chart. I'll ask myself, do I have some of these things? If I have 2 out of 3, I'm in the trade. If I have 1, I'll wait because I can always take a continuation in the macro. Say in a situation like this, if price did this and this happened, let's draw this back out again. Same kind of scenario here. And this could be for in any session, right? Say New York session now. Price forms a low, forms a high. You want to see price move higher, it's sitting right here. But right here, unfortunately, the time there is 9:35 in the morning, New York time. And you're thinking, it looks really good. We're in a 15-minute fair value gap. We've got a really nice inverse it's forming. It's got everything I need. The only thing I don't have is the macro. That's your thought, right? A lot of people have that thought. If there's a higher time frame gap, if we're in discount, I'm still going to take the trade. If there's none of that, I won't take the trade. But if you're not sure, you can just wait. Because if the market wants to move up, it will. What it'll do, it'll pull back, and then you can take the second re-entry during the macro. And that's what I'd say. So I'm not too strict on it. I'm more relaxed these days. Because otherwise you miss some setups that could be taken, and sometimes you would have experienced it. Or for those watching, you would have seen the market. You wait for the macro, you wait for 250, you wait for 1150, you wait for 1050, and you miss out on the trade because you didn't want to enter 2 minutes before the macro or 1 minute before the macro, because the macro will just spool straight towards liquidity. So that's what I'd say. We've got a bit of a mix. A lot of people less than 6 months, a lot of people also 2 to 5 years. So most kind of fresh in the market in terms of ICT, and then a lot also 2 to 5 years, 2 to 5 year mark, which is quite interesting. Who let me know in the chat who signed up for the My Fund of Futures giveaway. I know a few people in my Discord got that. $1 accounts. Crazy stuff. But that's the gist, right? So every week, probably on a Saturday or Sunday, I'm going to have these lives. The time could change. Right now in Australia, it's 5:30, so it's towards the evening. But I can appreciate for those maybe that trade New York session, they won't be able to come on at this time. These will be uploaded anyway. So after these lives, if you want to go back and watch it, they'll be uploaded. Anywhere from 1 hour to 2 hours, they'll probably be. And the times will change. But in the future, I'll give you guys a bit of notice for it. It's just that today I had a bit of time spare. And I thought I'd hop on and have a chat. Because people have questions. And this is a chance. Like if you're watching and you're like, oh, I've got these questions, just ask me whatever. Here to help. And we got people like in the Discord community anyway, a lot of people ask me in the free community there's a lot of people that trade all sessions. I personally only trade Asian and London, but these concepts, they work on all systems and on all sessions. I would trade New York if I could. If the times weren't so early, I would. I would, right? But because of the time frames, it just doesn't work. It just doesn't work. So we'll see. We'll see what happens as the market opens. As I was saying a bit earlier, there's a few options at open. Treat this as a range. Like that. Treat it as a range. If we're above here, sells. If we're down here, I wouldn't really look for longs. I'd wait for it to sweep below because we could just roll over. So this move here is pretty impulsive, but we'd have to wait to see what happens as price develops. And that's okay, yeah, all good, Nick. All good for the explanation. And just stick at it, guys. That's the main thing with trading. It's going to be hard. There's going to be weeks where you're like, oh, it's not the best. There's going to be weeks where you feel like you're killing it. But just know it's probability. So you'll have a good string of trades, bad string of trades. Based on your decisions in the moment, you might wish you would have done something, but you can't change what you've done. You can't. If you move your stop to break even, you get stop to break even, you can't change it. If you trail too aggressively, you can't change it. A losing trade doesn't mean you've done anything wrong unless you start to notice with your data. That's why you got to collect data. Unless you start to notice that it's impacting your results. And this way you got to still look at your stats. Obviously there's 5 days in the week. Let's assume you trade all 5 days and say you win 3 days. Just because you lose 2 doesn't mean you did anything wrong. But what I would do on those losing days is I'd reflect and I'd just ask yourself, and I ask myself this too, could I have done something differently, or did I do anything differently that I wouldn't normally do? And maybe you reflect on these days and you go, yeah, you know what? On these 2 days here, I was a bit fearful on these days. I was really aggressive. Usually I'm not that aggressive, but I was aggressive because, I was doing something last week that I shouldn't have done, for example. And reflect on that. It'll balance out, but you need to be able to reflect on that because maybe there's small tweaks you can make. Or maybe you get to the end of the week and you say, look, these 2 losing days, I followed my system, then that's great. I wouldn't think any much more into it. As you, progress and as time goes on, I just realized that a losing trade doesn't mean it's a broken system. It doesn't mean something's wrong. If someone else takes an opposite trade to me and they win and I lose, it doesn't mean anything. It just means that their way of viewing the market is correct for that moment. And there'll be instances where it's different. I coach a few people privately and they'll say the same thing to me too. They'll say, oh, maybe I need this. Maybe I need more higher time frame. Maybe I need this, but they don't. And a lot of people don't. You don't need anything else. You just need the confidence to stick to it. And unless, here's the thing, if you haven't got a payout yet, if you haven't passed an account, you're not going to get confidence from that. That doesn't exist yet. It will, but not yet. So the only way you get confidence if you haven't achieved those achievements yet, and it will happen in time, is you have to collect data. That's the only way. You have to go back in your chart, like I said, mark out macros, look at market structure. Look at the charts. And for example, if you trade New York session, try to backtest. Go to every single NFP in the last, I don't know, do like 30 NFPs or 40 NFPs and see what happens in 40 NFPs. And then collect the data yourself. But you have to be able to come up with that. Once you pass an account, you'll see it's possible. Once you get a pay, yes, you see it's possible. But until that point, you have to collect data, and that's your way of getting confidence, because you've seen it happen before, and if it's happened before, it can happen again. It can happen again. So it's about balancing everything. You don't get it right all the time. Neither do I. Sometimes I'll reflect, like even here, I got a video about it, but I tried to short. Where was it? Yeah, I tried to short here after a 3 drives pattern. It didn't work out. I had a small loss, but I was able to, in that moment, and I'll talk about this in the video, flick and go, wait a sec, that was a silly mistake. And I can admit that. And a lot of people would say, oh no, I must be right. It must be going short. I'm just going to go short again. Like they get stopped out. Oh no, I'll just go short again. Oh no, it has to go short. I'm just going to go short again. Oh, we've got a few down close candles. Oh, I'll go short again. Oh, it's gone. I'll go short again. And before you know it, you've now just taken an idea which was wrong and then tried to push an edge that just wasn't there. The market, it's really telling me, right? The fact that we come down here, we can't even sweep that low and we push up like this. It's telling me, Ruben, like we're not going down yet. So if you want to look for a trade, look for a long. We're still in the macro, right? Look for a long. And the same applies here. What changes up here, you might ask? What changes up here? The higher time frame, that's all. So I could appreciate here, like this is a very internal range. If you go like say to a 5-minute chart, zoom out a bit. By the time you get up here, I think, which was there, price is sitting up here. It's sitting right up here. If you're curious, it's sitting right there, around this area. Around this area. Like I'm just going to mark this out and we can drag this across. But that's what happens, right? So don't think that you have to be perfect with trading, but you have to accept that imperfection and realize that everyone's just a human. I'm just a human. I'll make mistakes. That trade that I took was a mistake. I should have been looking for a long in that position. And because I saw the 3 drives, because I saw other things went for a short, I accepted it. It was a risky trade before I took it. And I knew that if it didn't work out, that I could always look for a long later on and that it wouldn't matter too much and then I'd be okay, right? But here's the difference. Look, that is a 5-minute SIBI. Look, it's a 5-minute fair value gap. Mark that out in red. That's a 5-minute gap, right? Go back onto the 1-minute chart. That is what ICT calls a Mohawk price. All that means for me, it's just a little push above a PDRA, but we close back into it. That's all it is. And then what's the macro do? 250 to 310. Where's 250? Here. Where's 310? Here. What's the macro do? Spool. That's it. The reason why this wasn't good is because it wasn't a higher time frame zone. What I've seen in the past though, which is why I took it, having a 3 drives pattern sometimes means that you don't need to hit a high time frame zone. You don't need to sweep liquidity. And I thought that price would come a little bit lower, like especially after we had this. I entered off the order block here. We pushed down, great reaction. So I thought at least we'd come down here and then I could at least, trail the stop. Didn't happen though. So you have to be able to think as the market's printing. The market will tell us what it wants to do. Here you can see we tap into that higher time frame zone. We have a Mohawk in price and we start to print bearish structure. We start to invert things. That's a good sign. We start to respect bearish structure. We start to form more inversion gaps right here. We accumulate. Boom, we drop. When do we drop? 301, a lot of impulse. And then after that, choppy. But What happens here? 350 to 410. We start moving up again. What's this? 450 to 510. It's not random, right? So if you're looking for longs, you look for them in this macro and then in this macro. And then if you wanted to in this macro, I don't know, 650 to 710. It's all, every hour there's a macro, right? So you can trade whenever you want. You don't just have to trade in a kill zone. You can trade whenever. It's just a matter of lining up the times you can trade with the market structure. That's the main thing. Typical RR trades, does it matter to you? No, that's right, it's good. I love these types of questions. So, for example, right, typical RR for me will fluctuate week by week. It's at least a 1-to-1 because I don't like taking anything less than a 1-to-1. There are rare situations, this is important for anyone, there are rare situations where I will take less than a 1-to-1. And you might say, well, why is it the case? If we have a really big range and the market is moving very largely, I'm okay with taking less than a 1-to-1 if the market starts behaving weird, because I know that if I take 15 handles and it's a 0.8 risk to reward, that 15 handles will make up 1 or 2 losses. So I'm happy to do that. But typically it has to be at least a 1-to-1. It has to be. At least a 1-to-1. And so for example, like say this week, and it'll change, right? But I'll get some stats up just to see what they are here. So say this week, right, on Top Step. So my average risk to reward, 1.3. Win rate, 67, 66.67. Profit factor, 2.57. So that's that, right? My funded futures. And because I'll trade different sessions, right? So depending on the session, the volatility, how I trail my stop, it changes. But on that one, it's 1.3 risk to reward, 67% win rate, profit factor. I like to try and keep that above 1.5 if I can. If not, it doesn't matter, but I just need to be obviously more careful. See, profit factor is a much more important trading stat than risk to reward a lot of the time. Add your winners, add your losers, gets them as a ratio. And that's quite important. That is a stat I'll be looking at if you've got your data. That's what I say. All right, and then let's have a look. So yeah, that's typically what it could be, what it would be. Does it make sense? There are some weeks though, Nick, where the risk to reward will be more. It'll be more. But I aim for at least a 1-to-1. The reason why on that set of accounts it's 1 to 1.3 is because I've obviously taken a little bit more. And typically what I like to do now, especially on Top Step, is if it goes to a 1-to-1 and I think it's going to run a bit more, I'm going to trail my stop aggressively. And a lot of the time I get a little bit more juice out of it. Or sometimes I'll take a partial at 1-to-1 and I'll hold a runner. And that runner will go like a 1-to-2 or a 1 to 1.6 or 1 to 1.7. And so as a result, you kind of get a balance of, you know what I mean, of the different stats. But that's what I'll be looking into. Look into your profit factor. And that's for anyone too. Profit factor is quite an important thing. And yeah, that's what I say. So risk to reward doesn't matter too much. I like to get at least a 1-to-1. There's never been a time where my stats say less than a 1-to-1 on average. Doesn't happen. But day by day that could change. If I can hold a runner, then I'll hold a runner. If I can't, I'll take a base hit. That's what I say. I've found for me what works best is a balance between. 1-to-1s for me were fine, but I found that there was a bit more to be made, and that helped me, especially when there was a few losing trades in a row. That helped me by holding on to a few runners here and there. that allows you to take a few losers, but those runners, that extra money you've made there, creates a little buffer, which allows trading to be a bit easier for you. I'm not saying every trade to hold, but say we talk about New York session here. This is one where I think runners are very, very feasible because we've got these news lows and price often runs to them. So yeah, I do believe in this situation, even if you have to reattempt it, I do believe that go for a 1-to-1, who cares? But then this would be one where you try to hold and you try to get that 1-to-2, you try to average it out. And you can go for more, like, so it depends on the week. In a situation like this, when price like spools, see how you've got all these order blocks here. If I'm holding past the target, I'll just trail above the order block. So we form a green candle, put my stop there. Form a green candle, put my stop above that. Form this one, put it above that. And eventually you probably get stopped out right here. But see how you can squeeze a little bit more juice from the trade just by implementing that one strategy or that one system. And that has really helped me. And a lot of people, it helps them too, because back onto the topic of break even, why you might be at break even is you're going for 1-to-1s, but you're not picking high quality setups. And as a result, while the market conditions aren't that great, your win rate might be 50, 60%, and you're not seeing the results you want to see. So it's like a balance, you know what I mean? When you're looking at it, really with trading, it's a bit of a balance. Obviously, yeah, you've got your risk to reward, you've got your win rate, profit factor. I reckon that profit factor is the most important. Like, I know someone that, and they might be watching, right? Who knows? Has a very high win rate compared to me in the 80s, but their average winner and average loser is different. They've just got neutral and they take a lot more partials. So for them and for me, if I take less partials, the risk reward will probably be lower. If I take more partials, it'll be higher because there's greater chance that I'll hit the partial. But you play around with it, and I've found that based on the conditions, it's best to flow with the market. You know, the days where the market is really moving, play around with it. Practice. The only way anyone gets better at doing certain things is by practicing. This is for anyone listening too, right? If you want to practice holding runners and you're not comfortable and you just keep doing 1-to-1s, practice. That's the only way you get better. And you're gonna make mistakes, right? You're gonna fail at it sometimes. You're gonna wish you just took it all off, but you gotta practice, learn what works, learn what doesn't. Practice in an environment that's not gonna damage you. Whether it's demo or whether you have one account, where you practice runners on. But it's like the point of macros, right? Not every macro is gonna be a good macro that you wanna trade. Not every trade is gonna be one that you wanna hold runners on. You need to be in a high time frame range. You need to be in a high time frame fair value gap, and you need to have a lot of liquidity to target. You need to have these little bits and pieces. But yeah, hopefully that answers your question there. That's important for a lot of people. I think a lot of people focus on risk to reward, but it'll change. It'll change, and win rate too. Heaps of people ask me that. What's the win rate of the macro strategy? Well, I posted a video about a couple months back testing with me just trading macros. It was like 53%. And with just that video trading both London and New York session, $3,000 in 1 week, passing an account in 1 week, in like 5 days, with a 53% win rate. And the only reason that's possible is because some trades I'm holding, some trades I'm not. Do you think fair value gaps / ICT concepts will stop working? Not really, Nick, nah. Because here's the thing. We are such small fish, in my opinion, in the sea of trading. Such small fish. And the accounts we trade, if you trade prop firms, they're simulation accounts. We're not technically on the real markets, if that makes sense. So I think it's always going to work. ICT is always going to work. everything will always work, but there will be periods where they don't work as well. And that'll be like seasonal tendencies. Seasonal tendencies where, you know, more volume, less volume, or NFP days, more volatility, less volatility. Like, it's a typical theme that before NFP, London session, you got to be careful because it can be very, very choppy. And if you do trade it, which I did, you just got to be able to manage your risk properly. There's nothing wrong with doing it, but these are the little bits and pieces that will impact the stats. So it's just one of those things really with trading, but that's the beauty of it. You know, there's so many ways to trade, so many ways to do things that it allows for everything. So once you've found a system, once you've found a model for anyone, stick to it. Collect data. Like I said, you don't need an 80% win rate. You can, but you don't need to have that. You can make a lot of decent money with a 45, 50% win rate. You can. But it's about just opening the perspectives. Because who knows, maybe some people here, that will work better for you. Maybe for you, you work better at the 50% or 45% and holding trades. Other people are different. Other people want that quick hit. They want that 75% win rate. They want to just do that. But for me, I'd say I'm kind of in the middle. I'm in the middle, right? About 70%. Risk to reward, a mix of 1 to 1 to 1 to 2. I like holding trades. I like trying to hold. I like trying to capitalize on the winners. But I'm also of the mindset of preserving capital. Also, another stat to look at is this. What's your average winning time? And what's your average losing time? Your average winning time should be more than that. Because that tells you that you're holding trades that are meant to be held. And this tells you that you're cutting the losers short. That's important. So I reckon the stats to look at, data sample, profit factor, have a look at this. Have a look at average winning time, average losing time. And then you're going to find a way to mold your system or strategy into what works for you. Exactly, Nick, exactly. And that's the best part about it. So what I tell people that, you know, that I'm coaching or that ask me, like here on YouTube, Nick, or someone messages me, it's hard. It's hard to say, well, this will work for you. I'm not a financial advisor, but what works for me, even in my Discord, doesn't work for other people. It doesn't. And vice versa. Like some things that people do in my Discord, I don't do myself. So it's variable because everyone's got a personality. Everyone's got a risk tolerance. Everyone's got a level of risk they're happy to take. Oh yeah, I'll push it here. I won't push it there. A level of fear, a level of greed. Everyone's on a different, I guess, spectrum in terms of that. Pro trading, can you explain more about? Yeah, so average winning time, average losing time, right? They're important stats. Average winning time, average losing time. The reason for that is this. Say, for example, your average winning time is 20 minutes and your average losing time is 1 hour. Just by looking at that, that means you're holding losers longer than your winners. That doesn't sound good. Why are you holding trades longer than your winning trades? Why? This, for me, if my stats said that, or like on a given day, if my stats said that, that means one or two things, if we're being realistic, right? Number one, you're doing this, you're moving your stop. So maybe the trade would have been 20 minutes, but you've moved your stop, now you're in the trade for an hour, and everyone's been there, right? Or number two, you can't identify when your narrative is proven wrong. And so you're just hoping that it works, you're hoping. And that's what it tells me in terms of you know, your average losing time. If it was reversed, you know, if the average winning time was not 20 minutes and that was, say, and everyone's going to be different. Say that was like 30 minutes, right? We'll say 2 hours. Say you weren't a scalper. Then that tells me, look, when your trade is winning, you're not fearful to hold it. You're going to let it run. You're going to let the winners run. You're going to cut the losers short. And typically, I mean, for me, yeah, with scalping, we're looking at about that, give or take. I reckon that's what we're looking at. But everyone's different, right? And every session's different. Weeks are different. 2 months are different. Last month, these values were longer. They were bigger because I had to hold a lot longer for the runners, a lot longer because it was so choppy sometimes. And same for the losers. Because sometimes the actual area that could be violated, that violates my ID, was not violated. So I had to sit in the trade, sit, 20 minutes, 25 minutes. That happens sometimes too. Should you cut losses after 1 hour? Or it depends. It depends. It depends if, you know, if price violates where you think it shouldn't, then yeah, cut it. You know, so say for example, like I'll give you an example when I took a trade, right? When I took a losing trade. I took a trade from the order block here, right? As price came down, as all printing down. So in my head, I wanted to see price sell off and do it very quickly. So my position looks something like this. As that candle was printing, very tight stop. As that candle kind of came down like this, I wanted to see price continue lower. So if price closed back up in the range, I want to have my stops reduced. And because price did that, then I get out of the trade. But you might have had your stop here, for example, and there might be a different point where I guess your ID is invalidated. When your ID is invalidated, that's when you've got to get out of the trade. But if it's not invalidated, then that's okay. So, sometimes you have to sit through some trial. Like say for example here, say you went for a short, because I know some people did in the Discord. Say you went for a short here, you're like, yeah, I love it. This looks very, very good. 5 minute fair value gap. Yeah, beautiful. Just because we're chopping here doesn't mean to get out of the trade. Because after accumulation, we're going to expand, and it should expand in your favor if you're correct. So a lot of people freak out there. It hasn't violated anything. It's just chopping. So that is okay. That's fine. A lot of the time, like if you're in a trade and we're going to reverse, after accumulation, we'll expand. You'll see it. Like after we accumulate, we expand. If you're wrong, price will do this and it will come back up and then you can close it. But here, if you want to see price expand lower, then you can, you know, if you're in the trade for 10 minutes, like, it's taken too long. If you're not liking it, just drop it dramatically, you know, because you want to see price expand lower. And sometimes, unfortunately, yeah, sometimes you'll drop it, you'll get stopped out, it comes up here and then it starts to reverse again. Just look for another re-entry. Take the second inverse, go again. So you won't always get it correct, but that's what I'd say in terms of like moving stops and, you know, even cutting the losses. If it invalidates something, cut it. If it doesn't, don't worry about it. You won't always get that right. Sometimes you look back in hindsight. Everyone loves hindsight, right? And I look back sometimes and you go, yeah, you know, I probably should have not moved my stop as quick and I wouldn't have taken a loss and then I wouldn't have had to take 2 trades. It would have just been 1 trade, but you can't always predict that. Even going back a few weeks, let me just go back to August. There was a day here in the London session. Let's go back for a sec. So this is September here. Where are we? It was back here somewhere. Yeah, here, right? Like say here, for example, this is near a macro. If you wanted a short, for example, and price is just doing this, it's very slow. Who cares? It hasn't violated anything. There's another day where it was very, very slow. Let's go back. And this applies for any session too. So you've got to allow for different things to happen. You've got to permit for it to happen. Here's another macro example. Like say this. Say you entered somewhere here. Say you did this, right? You could take a 1-to-1 and partial and get stopped at break even. That's fine. But as long as price respects this and it doesn't sell off dramatically, there's nothing wrong with what price is doing. Let's go back a little bit more. Even here, you might have to endure a lot of pain for the correct move. So yeah, that's what I'd say. Like, it's one of those things. It takes time because nothing's going to be perfect. So the hard part for a lot of people, and I've been there myself, is you'll have one day, right, where you'll move your stop to break even and it works out. You're glad that you did it, because if you didn't, you would have taken a full stop and you go, oh, beautiful. My risk management system works. Oh, perfect. And then the next day you do the same thing. You go, oh, it didn't work. The next day, same thing. Oh, it didn't work. And because you have 2 of those days, you think that you must need to change how you manage risk, but not necessarily. Not necessarily. You'll get it wrong. This for anyone, but you just got to be able to bounce back. As per to my experience, getting used to closing trades early causes lower win rate and bad results at the end, because that plays with your psychology. Yeah, I mean, you got to accept the risk, right? You got to accept the risk before you get in the trade, and have the levels. You know, have the levels where if it does this, I'm out. Like, you got to have those levels. And I love when price is quick, but unfortunately, it doesn't always happen. Or, you know, say here, maybe you wanted longs, right? And maybe you enter from here and you have to endure all this. But as long as it's respecting your areas, it's fine. And you can cut trades early a couple times. It's not going to matter. But I think if you cut trades multiple times, multiple times, early, that's when it starts to become bad. Because as you're saying, it's going to impact your statistics and also your results, which is a big thing. So if someone came to me and they said, you know, Ruben, I cut, you know, I took 10 trades this week, just say for example, and 2 of the trades I cut, that's okay. All right. But if you come to the end of the week and you go, I took 10 trades, I cut 8 trades, and I should have held them because most of these 8 trades actually ran heaps more, then there's something you need to modify. But if most of the trades that you cut actually would have been stopped out, then you're doing something good. Which is the way I like to see it. But that's a really good question. Or questions. That's what you want. Like even here, right? So just to talk briefly, right? If we go back here and we look at, you know, say here's an example. Look at this. This is back in September 1st. Now imagine, because I took a short, it was just a scalp. I took a scalp from here to here, 10 handles done. But imagine you wanted to hold a runner and you're sitting in this trade, right? And you're sitting in this trade for like hours and hours. And you're thinking, well, what do I do? Well, if your draw liquidity is still there and you're at break even, who cares? Eventually we probably get there, you know what I mean? And sometimes the market makes you wait. That's the trade, right? That's the trade. That's it. So that's kind of the way I see it. Sometimes there'll be losses, sometimes it'll be easy, sometimes it'll be too quick, but it's always a chance. So you got to take the chances or the probabilities that you like. And you can do that, you can partial. Like sometimes I do this, you know, so if I'm in, you know, very big positions with three minis, for example, I'm going to partial. You know, I'm going to take something off at 10 and then I'll take another one off, or 4. I'm going to take another one off. I'm just going to take it off and off because I want to pay myself. And yes, I did want price to go to these highs, but I pay myself. So there's nothing wrong with that. You can do any of this stuff, right? And all this stuff on my Twitter, if you're not there yet, there's a lot of good stuff there, right? A lot of information if you get all those photos and you study those photos, you'll come up with a really good model or systems. All macro stuff, all macros, ICT macros. But yeah, new week, guys, coming up soon. I'm going to stand for another 10, 15 minutes. Answer some more questions. Yeah, well, daily bias. ICT daily bias. That's a good question. And let's discuss it, right? So let's just get up another chart. All right. The easiest way to determine bias is combine macros and market structure. So for those that are still here or that have kind of come to the stream, the easiest way is just to combine macros and market structure. There's a few general principles that I trade by, and I'll continue to do so even if I get it wrong. It doesn't bother me. I'll ask you guys, right? Before I give away what I'm going to say, I'll ask you guys. If price has been stepping up like this for Asian session and London session, do you think there's a higher chance that New York could at least sweep some liquidity, or do you think that it's just going to keep going up all day for the whole day? What would you guys say? Because this is a big part of our trade. So for those, we'll do a couple examples, but for those that trade New York session, interesting. What do you reckon, Nick? Everyone else? If Asian session's gone up, if London session's gone up, we're now up about 400 handles in the day. We've gone up. Because typically, I'll tell you, right? So typically, if price has been stepping up and up and up and up and up and up and up, I'm looking for the reversal. That's what I'm doing. And that's why on Friday, I got stopped out and then I actually went with the trend. But here's what I'd say. If you trade the New York session and 2 previous sessions and the Asian and London have just gone up, from what I've seen and from my study, there's a high chance that sometime in New York, there's going to be some type of reversal that you can capitalize on. That's what I've found. If Asian and London are a bit mixed, well, New York session can be mixed as well. But if I was to still trade New York, I would love the days. I love the days when I wake up in the morning, when it reverses, when I see Asian session steps up and up and up and up. London might do this, but it keeps going up. And then we're too overextended. We can't keep going up, we can't keep going down. And those are the days that have the biggest move. And the same would apply for London session traders, because I trade that, right? If PM session does this, if New York session does this, if PM session does this, and then we're in Asian session, we start to do this, I'm looking for buyers already, because in my head, I'm more favored to buyers, just from the general principle that based on probability, we can't keep going down forever, we can't keep going up forever. That's the first point. But you combine that, and here's the key, you combine that with dealing ranges. So if price forms a low here on the 15 minute, forms a high here, we'll do both sessions, right? Let's assume this is, I don't know, assume that is a New York AM session high. And say I trade Asian session, which I do, and the London, we go down like this, and now we're in Asian session. I'm looking for longs. Why? Because for multiple hours, we've been generating liquidity and we're in the bottom portion, we're in discount. But I use that and I combine that with macros. So for example, there might be a macro here, there might be a fair value gap. If price just continues selling off, I'll wait to see if we react after sweeping the low. If we just keep going down, I go, who cares? At that point in time, I don't mind if price keeps selling off because I know that it just wasn't my day. But the important part with finding a bias or building a narrative is, having a system. You're going to have a system to apply day in and day out. So that's what I'd say. And then if you trade the New York session, the same thing. We could do a bullish example. Asian session does this. London session does this. I'm looking for buys. I'm looking for buys if I'm in New York, which I don't trade, but I'm looking for buys. Why? Because there's a power of 3. Just based on general market structure. So if you go back to like any of the charts here, look, apply those concepts. Asian session steps up. London session, same thing. Manipulation, sells. Go back to the previous day. Accumulate, accumulate, accumulate. What do we do at the start of New York? We manipulate. Look for buys. From where? From a high time frame gap. Asian session or London session traders. What's price done? Stepped up. We're moving down. Look, this is from 4 o'clock here, 4:15. Moving down for multiple hours, moving down, moving down, moving down, moving down, moving down. 15-minute fair value gap. I'm looking for longs because there's a lot of liquidity above and also here. Okay. This example. Moving down, moving down, moving down, moving down. Sweep below. Macro, look for longs. So the reason, the way I build a narrative or a bias is I use dealing ranges. I use 15-minute fair value gaps. And I know that once price engages a fair value gap, there's every chance it finds support or resistance there. That's one theory that I have. If we're in premium or discount, there's a greater chance of reversal, especially if we're delivering also from a higher time frame gap. And if I can combine that with a macro, then happy days. That's what I'd say. But there's different playbooks. Like I got different playbooks. So that, what I just said there is how I trade, everything. Nothing hidden. Like everything I teach on YouTube is how I trade. And then obviously with the community, we go live, I go live and I talk through the markets for London session. I go into a bit more depth with more examples. I save time there for a lot of people, but also seeing it live is different to me talking about it here. That's the main difference as well, because a lot of people like to watch it, but that's all I do. Like I don't even need a lot of the time any high time frames. All I need is the 15, the 1. Are we in a fair value gap? Are we not? Are we in premium discount? Are we not? Do we have the power 3? Do we not? Do we have low resistance? Do we not? That's all I ask myself. And then from those questions and from the answers I get, if more seem bullish, I'm going for a buy. If more seem bearish, I'm going for a sell. And then all I need to make sure of is on the 1 minute chart that it's confirmed. Like I need the impulse. That's a good question. We'll make this stream 2 hours, guys. 5 more minutes, and I'll hop off. This will be something every week. So if you've got questions, keep posting them in. Every week we'll hop on, every fortnight, something like that. Saturday, Sunday, we'll hop on and have a chat. But put in the work for anyone as well. Put in the work, study. All the things you talked about today and the videos I posted, other creators, watch anyone, doesn't matter. But whoever you watch, whether you watch me or someone else, you got to apply it to your own charts. You're going to build confidence that way. You're going to see the market and see things repeat, and that'll allow you to have confidence. That's my best advice coming into the week. Do any indicators help you getting into a trade? No, not really. No. So my opinion on indicators is this. A lot of people ask me if I'm going to create one. Maybe. But at this stage, I don't use them. So I don't use them. For me and for other people, I tell people, if you want to use them once you've got experience to make your life easier, then do it. If it makes it a bit more fun, do it. Just do it. Right? But if you have to know it, you have to know it. So if I said to you or anyone here, hey, can you mark out the macro from whatever the session you trade, and can you mark out the PDRAs that you'd enter from and give me reason as to why you take that trade, and you can't do that, you shouldn't be using indicators, because indicators give people a false hope when they haven't learned the concept already. If you know the concept, you know the macros, you know the session times, you know how the sessions behave because you've studied it, then do it. If you want to use an indicator to make your life easier, go for it. Go for it. That's my belief. I mean, Some people agree, some people don't, but that's my belief. It's like, yeah, I could use any indicator, but I enjoy the process. I'm a bit old school, and I think because that's how I learned without any indicators, that's kind of what I've stuck to. But I find a lot of people that use indicators, they go, I don't understand this concept enough. But even just charting it out, even just marking out macros, or even on your charts, guys, marking this out. You know, marking out, oh, okay, where's the macro, and going in your charts and then going on the 1 minute chart, you know, and then just marking things out. And going, oh yeah, this is the macro, and then going, oh, what do we do in this macro? Cool. What do we do at 8:30? Or even SMT, like things like that. Marking that out is really important. Like if you want to use those concepts, mark it out, because it gets you in the habit of looking for things and not necessarily relying on other things. So that's kind of my opinion. Nick. Yeah, session indicator is handy. Like if you know, like sessions, most people know that. If you know what the sessions are, then if you want to get it on, get it on. Which are the best macros I look at? My answer to that, Nick, is any macro, because I guess for me, the best macros are the ones that line up with premium discount, high time frame fair value gaps. So to put simply, we might be in Silver Bullet. We might be in London Open session. We might be in New York Open Silver Bullet. But it doesn't mean it's a good macro just because it's a macro. We need to have liquidity to target the opposing side, and we need to have a high time frame level. If those things are there, I mean, for all I care, it could be 6:50 p.m. to 7:10. It could be I wake up in the morning and in PM session, the final macro of the day, we're in a really good spot. So what I'd say for anyone in yourself is, yeah, most of the time, the ones that happen around Silver Bullet are the best ones, you know, most of the time, but don't expect it to be. So don't just go, oh yeah, there's a macro, I'm going to trade it because we're in Silver Bullet. On a side note, if you're limited for time, then yeah, I'll just stick to the ones around Silver Bullet, but don't force trades. You won't get trades every day if you just stick to the Silver Bullet macros. So what I'd do then is, if you've got limited time, I'll just go 250 to 310 for London to 350 to 410. And that's it. If there's something there, great. If there's not, who cares? New York session, much easier. If I was trading New York session again, I'd pretty much just trade the first two. I'd trade 950 to 1010, 1050 to 1110. If there was a power 3, I'd look for a power 3 situation in the first macro due to swing. If not, and I'm still like expecting a reversal, I'll look for the other one. But you can see here there's a due to swing up. That's manipulation up between 9:30 and 10, and then we get the 10 o'clock reversal. That's what people talk about. And it'd be the same for pretty much all New York sessions. Look, 10 o'clock, just after we reverse up. I know a lot of people trade New York. Look, anywhere between 9:30 to 10, you should have a reversal about 10 o'clock. And then if that doesn't work, or say you miss the long, just take the short. Just wait for the next one. So, and if you trade Asian session, because I know some people do, I trade Asian. It's tricky. You know, Asian session's tricky because it's a long time. But if you trade Asian, I would mark out the fair value gaps on your chart and just wait until price engages a high time frame gap, because otherwise you're going to be just staring. For me, I'm lucky because I can do other things on the side. So I've got other things I can be doing. I can look on the side. But if you want to dedicate time, I can't say that one specific macro in Asian session has been better. It just depends where price is. You know, even here, look. Right, look at this day here. When was this? 4th of September. Here, look at that. That's the 750 to 810 macro. Right, 650 to 710. Why are these good macros? Because these macros are sitting inside of a fair value gap. Why is this a good macro? 1150 to 1210, because it's sitting inside a fair value gap. This one here, who cares? Like over here, who cares? But you're just looking for ones that line up with structure. That's what I'd say. It's the best way to do it. Any final questions, guys? I'll post more about this, so expect about once a week on a weekend or a Friday. It might even be on a Friday, to be honest. Friday, Saturday, or Sunday. We'll do one of these sessions, maybe a weekly recap. It'll just change, question and answer. Maybe go through the week. But the main thing moving forward for anyone is you got to stick to a system. Don't get caught up in changing strategies. Don't get caught up in thinking necessarily you need to change things. It's going to take time. Don't expect it to work in 1 month, 2 months, 3 months, 2 years. It won't. Everyone's different. The more time you can put into learning at the start, yes, your learning curve might be quicker, but the more time you trade doesn't equate to more money. Just trust me on that, right? A lot of people, and I myself included now, I would much rather just be on the charts for 20 minutes. If there's a setup, I'm done. I don't care if there's another setup after. I don't care. And that's the point you'll get to where you'd rather trade less than more. So you're just waiting for those good setups and you're not feeling the pressure just because it's a session to trade it. You still got to have your confirmations, is what I'd say. Got a video coming tomorrow. So if you haven't voted yet and you're in my Discord or Telegram, vote for that. It's one of three. One of three. They'll all be posted. I'm going to go back to back days. One is talking about using the power of 3 for the bias. We've discussed a little bit of that today, but I'll go into a bit more detail. The other video is about controlling emotions, taking losses, how to come back from that. And the third is about why I believe that one trade a day is not enough. And we discussed that a little bit today, but I'll go into a little bit more detail. So keep an eye out for that. And for those that still have, well, for some people, it's just Sunday morning. So if you're watching this later on, or you're watching this now and you're from the States or somewhere at Sunday morning, enjoy the rest of your weekend. For us in Australia, New Zealand, potentially other parts of the world, it's Sunday night, 6:30. It's dark. It's dark here in Australia already. And we're looking forward to the new week. So stick to your rules. Stay at it, guys. And if you're not yet in the free Discord, there's nothing to lose there. Join the Discord. Talk in the community. If you're not yet following me on Twitter, follow me there. I post pretty much every day. And I'm moving a lot of stuff to Twitter. I like the platform, I like the ease of use, but I will still use Telegram. That is still going to be used. So if you follow me there too, I'll still be posting. But there'll be more YouTube streams coming in the future when I get time. So that is that, guys. Thanks for joining me today. And enjoy the rest of your weekend. We'll talk very soon. All the best. Peace.